The story begins in a classroom, not in Las Vegas, not on Wall Street, but in a quiet university, in a room filled with chalk dust and blackboards. A man. Alone, silent, leaning over his notebook. But in his mind, he was rewriting the rules of every game. His name was Edward Thorp, a math professor. Not a gambler, not a banker. But one question wouldn't let him go: if I know what card is coming, if I calculate the odds precisely, is it still gambling? That question, that obsession, that desire to beat something everyone said couldn't be beaten, led him to the most dangerous playground of all, blackjack. Back then, no one looked at blackjack like that. They said it was luck, a game, win or lose, it's in God's hands. But to Thorp, God was math, and if God follows equations, he can be beaten. Late nights, one man, one machine slower than a pocket calculator. He ran thousands of blackjack simulations. Until finally, he discovered something the world had never seen: card counting. No cheating, no tricks, just math. But to the casinos? Worse than cheating. In 1962, he published his book, Beat the Dealer. And within months, something strange happened in Vegas. The tables didn't empty. But new players started showing up. Players who won more than usual. Quiet people, sitting still, staring at their tiny charts. And winning. Casino managers panicked. Blackjack was no longer their game. They changed the rules. Added more decks, used machines to deal cards. Banned the winners. But it was too late. The rules had already changed. And Thorp? Quiet as ever. He chose his next game. Not roulette, not poker, something far bigger, far more ruthless, and far more exciting: the stock market. When Ed Thorp first walked into the New York Stock Exchange, he wasn't wearing pinstripes, no red tie. Just his old gray coat. A pocket calculator in his jacket, and in his mind, 1,000 questions. Everyone there was shaking hands, smiling, but beneath the surface, they were all chasing one thing: winning. Thorp stood at the edge, watching, just like that first night at the casino. Not from above, not from below, just analyzing. A little later, he connected with one of the giants of information theory, Claude Shannon, the same man who helped invent the internet, encryption, and modern communication. But Shannon had a strange habit: he liked making friends with strange minds. And Thorp was strange in all the right ways. A math genius who had already beaten blackjack. Shannon asked him, "So, what now?" And Thorp said, "I'm going to play Wall Street the same way." Shannon smiled and said, "Then let's run an experiment." So they started, in a small office in Princeton, with a computer so weak, today it wouldn't even run a washing machine. Their goal? To find patterns in the stock market, just like they found in the cards. Thorp began studying warrants, a kind of option to buy or sell stocks in the future. A complex tool that even many seasoned investors avoided. But for Thorp, complexity meant opportunity. And soon, he realized something big: warrants were mispriced, the market was wrong. And if you knew the real value, you could profit. That was the golden moment, the moment every real gambler lives for, when you know the game is tilted in your favor. And it's time to bet. Thorp placed his bet on himself, on his math, and on one belief: that the financial markets were just fancy casinos where people thought science ruled. But it didn't. He launched a quiet fund, no headlines, no noise. Just a name, Princeton Newport Partners. And one rule: risk is only rational when it's controlled. Year 1? Profit. Year 2? Even more. Markets went up, then crashed, didn't matter. Thorp's fund just kept winning, calm, calculated, nerves of ice. But most importantly, it didn't lose. When Edward Thorp posted profits for the third year in a row, they said, he got lucky. By year 5, They whispered, okay, maybe he has a formula. But by year 19, with not even a single losing year, everyone went silent. And when the market crashed, but Thorp's fund still made money? That silence turned into something far more dangerous: attention. The attention of the government, of the SEC, of the big money players. Even from people who had no idea what he was doing. But knew, deep down, he was winning too much. Thorp never cheated. Never stole. Never even bent a gray area rule. He just had a model. A model that wasn't simple, but was brutally clear: price assets the right way, especially the ones nobody understood, like warrants, exploit price differences across markets, the art of arbitrage, and above all, make decisions with math, not emotions. If the model said buy, he bought; if it said sell, he sold. No analysts. No headlines, no fear. Just numbers. But on Wall Street, if you play too perfectly, they start rewriting the rules. It began when the FBI started probing private investment funds. Not because of Thorp, but because some companies linked to his fund were under suspicion. And Thorp? Calm. Quiet, precise. He sensed it: the table was shifting, and once again, he did what he'd always done best: step away from the game. Before the game turns against you. Voluntarily, he stepped down from managing the fund, sold off his shares, and walked away from the center of power. Not like a loser, not like someone afraid, but like an old gambler, who knows when the ground beneath him is starting to hum, and stands up, without a word, and leaves the table. He said it years later: no one made me leave, I just learned. If you're winning, you don't need to play forever. Today, when an algorithm makes a trade in 1/100th of a second, when a bot runs trades all night long, when a billion-dollar fund senses a tremor in the market before you even notice it, ask yourself, who's behind it all? An old man, sitting quietly in his California home, every morning, sipping green tea, reading the market headlines, and smiling. His name doesn't come up often. But if you trade, if you analyze markets, if you want to make decisions without emotion, then whether you know it or not, you're standing on his shoulders. Edward Thorp, the man who didn't try to predict the market, he modeled it. Back in the 90s, when most people hadn't even touched the internet, Thorp wrote a paper, How to Price Options Accurately Using Black-Scholes Models, Even When the Market Acts Irrational. Years later, firms like Renaissance Technologies and Citadel became silent giants of the financial world. And if you ask their founders who inspired them, they'll say, Thorp. The man who figured out early that numbers don't lie, we just don't always know how to listen. One day, a reporter asked him, if you were that good, why did you walk away? Thorp, with his usual calm smile, replied, I wasn't chasing money, I wasn't chasing wins, I was chasing the understanding of the game itself. Today, the same man who once beat blackjack with a homemade chart is 91 years old, yes, still alive, writing, teaching, thinking. And if there's one thing he values above all, it's a line he's repeated over and over: my greatest asset wasn't my money, it was my mind. So maybe you're chasing profits, or a better job, or freedom. Trying to escape the grind. Trying to win. But if there's one lesson to take from this quiet old genius, it's this: the game matters, but what matters more is knowing when to play it, and when to walk away. If this story made you pause, hit like, share your thoughts in the comments, and don't forget to subscribe for more true stories that change how you think, right here on Money Mind. We don't just tell stories, we reveal the system behind them.